Hey traders, Steven Kwitzel here. It's Thursday morning, September the 19th. We're going to go over several things today. We're going to go over the overall market. The rate cut was yesterday. We're going to look at how that could potentially impact us. We're going to look at some up and coming ETFs and starting to see some new leadership. We're going to look at oil, gold. So we're going to kind of dive deep into everything. So I want to get right into it. So you have the Nasdaq right here, and if you followed me for a while, you know that I like to follow the 20-day EMA, which is what I kind of call the rally line. All right, so in the strongest rallies, you can see that the market, when you're in a correction, it can find resistance at the 20-day moving average. You can see right here, it'll find resistance the first couple times. You can see right here, it found resistance twice. And in this correction right here, you can see that it just kind of gets rejected, so it can take that second leg down. Well, the same is true on a rally. So now you can look at the price action of the market, show the strength, and you can see now we found support twice. And yesterday rate cut, and so the Nasdaq came down, the overall market touched it, and then reversed, and now is showing to be higher today. And so right now, the way I'm looking at this, you have the 20 EMA that is crossing the 50-day, so that's bullish. You have the price action that is finding support at the 20-day EMA, that's bullish. And I also think it's bullish that we're very close to an all-time high. Now, why is that important? Because you can see over here, the Nasdaq picked off the September high just for a minute, and then before it pulled back. So it's kind of like a magnet, right? The price action just is attracted to the recent high like a magnet. Pick it off, maybe pick the shorts off, and then correct. Same thing right here. You can see that the price action did go up to an all-time high for a couple weeks and then sold off. So now, based on this price action, I'm going to assume that the same is going to happen right here. Okay? So I'm looking at the glass half full. Breadth is strong, so it's really hard for me to make the bearish case. In addition, you have that Saudi news that came out on September, and the market really shrugged it off. So I know some people were saying, hey, this is really going to slam the markets, and it pushed up oil prices quite a bit. But it didn't really phase equity prices. And to me, when the market can shrug off bearish news and continue higher, that just shows me the market wants to go higher. So right now, so you might ask, when will I change my tune? So I'm going to stay with the trend as long as I can. If the price action kind of breaks this level, right? Breaks, this 8,050 level, the Nasdaq, and just kind of falls back in the trading range, that's when I'll change my tune. But until that happens, you have support, double support with crossover. I could draw a trend line right here, and breadth is good. So, I think we have to be bullish. One development, I'm not going to look at the S&P 500 because it looks very similar, but one development I want to talk about is the small caps. Now, the small caps, I don't really look at it as, a leading indicator at all, right? If small caps are underperforming, it is what it is. There's different reasons, the moves based on the dollar, moves based on the financials, but small caps, I've noticed, can be completely uncorrelated with the Nasdaq and S&P 500. So an interesting development has happened in the last couple of weeks. Now, all of a sudden, small caps, this is a relative ratio chart to the S&P 500. So when this squiggly line is going down, the small caps are underperforming. And when this squiggly line is going up, it means small caps are outperforming. Well, now it broke out of this trend line right here, so it's looking kind of interesting to me. Now, when I go to the price action down here, you can see the price action up here is before the bear market of last year. We still haven't even hit an all-time high, and the Nasdaq and S&P 500 have hit an all-time high twice, and are gunning. The S&P 500 could hit a new all-time high today. So people are going to look at this and say bearish. Yeah, but if you use this as a leading indicator, I think you're going to miss out on some rallies. But what I would tell you is be prepared. Right now, be prepared for this to just completely surge out of here, because this is a personality change, right? All of a sudden, this is a personality change. You have a real surge off the bottom, and it could be the surge based on yields have bounced off the bottom. Yields are positively correlated with financials. Financials have a big weighting in the small caps. So, but to me, it kind of appears, if this gets broken right here, I think small caps are going to outperform, and they're going to outperform in a big way. Okay? So, and it can just surge so quickly. So just kind of keep your eye on small caps, and if the market continues to rally, I think that it could lead in a big way. Significant outperformance over the S&P 500. In addition, you look at, this RSI, which I don't a lot of time make trading decisions off it, but I look at it for, again, personality changes, and you have the small caps down here. It stayed overbought for, over a week. And the last time that happened was right here at the beginning of this rally. Now, do I think we're going to get this right here? I'm not saying that, but I'm just saying that hasn't happened since the beginning of this rally. So I'm just trying to look at the weight of the evidence to see, okay, could this be the start of something where small caps run? Okay? So, and you have to keep in mind that, when you have, the Saudi oil fields getting blown up, you have the election, you have all these news, and you have a rate cut suggesting that the economy is slowing, and the market is still at an all-time high. So when I see all that, pay attention to what happens on the chart. Make your decisions to what happens on the chart, not what happens on the news. Because if you would have sold everything based on the Saudi thing, you probably be kicking yourself today. So just kind of keep in mind on that. Now, let's look at the overall price action of the Brent. So you can see the percent of stocks in the S&P 500 above the 20-day EMA is 79%. That's definitely bullish. And you can see technology right here is lagging the overall S&P 500, but financials are leading all of a sudden the XLF. So breadth and financials is strong, but I think breadth right now is strong in everything really except for healthcare, which is just kind of, just probably in just a trading range still. But, you had this surge in energy, which at the moment I'm not buying it, and I'll get into an oil chart in a minute and I'll tell you why. But everything is looking strong. Technology is starting to, I wouldn't say weaken, but is not leading anymore. And that's okay. The technology doesn't always have to lead, right? But so I'm just looking at some of these other pockets for potential pockets of strength. Now, when I look at the price, let's go to this West Texas oil chart. So this is a long-term chart of West Texas, and this just goes to show you how hard it is sometimes to invest in commodities long-term, because they can be in a secular bear market for decades, or a decade at a time. So, you had 110 to 26 price of oil. It's came back, but it's still, somewhere in the middle here. But, I drew these trend lines right here, and I said, okay, it's got to break somewhere. It's going to break down, or it's going to break out. If you a couple weeks ago, I would have said it was going to break down. Then the Saudi oil fields got hit. But you can see this green bar, it's selling off. So it could be a false breakout, which could mean an above average move to the downside. But here's what I look at when I say, okay, before I'm going to get excited about energy stocks, for one, they have underperformed the S&P 500 ever since oil was above $100. You can look at this. This is a 7-year chart, and this is the XLE, relative ratio, to the S&P 500. And you can see right here that it's had its moments, it's had its rallies. 6 months in 2016, they outperformed, coming off the bottom of oil price, $26. But for the most part, for 7 years, it has underperformed. And the way I see this, when I draw a trend line right here, it is still underperforming. So until energy stocks outperform the S&P 500, not really interested. In addition, you want the stocks to outperform the commodities they track, or else why would you buy stocks, right? Stocks have earnings, commodities don't. So you would think that you'd want to buy stocks when they're outperforming the commodities. That means, gives the rally a little bit more evidence. Well, right now, energy stocks are still underperforming the price of oil. Now, there was a surge right here, so I could draw a downtrend line. Right here, you could say it broke out. Now it's retesting that trend line. But because I'm still seeing this, I'm going to draw it in the most conservative place, meaning I want, a little bit of extra evidence, because right now it's still underperforming oil. So I think it definitely was Jim Rogers. I believe, was one of the hedge fund managers with, I think it was George Soros back in the 70s of the Quantum Fund. Now he's got his own commodities index. So he's kind of the commodities guru. I believe it was in one of his books that I read that I heard him say that for the most part, commodity stocks, if you're going to hold them long term, they don't outperform the commodity they track because, I don't know, they just come and go. I don't remember what his reason is, but that's kind of one reason why I'm biased against commodity stocks, at least for the long term. Doesn't mean I won't trend follow them, right, when they're in a trend, but at least for the long term, just because it's so hard to outperform long term the commodity they track, unless you own an MLP that has an 8% dividend, and that MLP has to do really well. But for the most part, I'm not going to buy and hold a commodity stock unless I have a really, really strong case for something. So I want to go back to another commodity, the gold chart. And this is something that I put up a month or maybe even two ago. So if you haven't seen this chart, I want to kind of recap because I think this is a long-term development that I'm going to keep my eye on. GLD, just the GLD, no leverage, no miners, just the price of the ETF from 2005 to 2011. This ETF was up 347.5% approximately. Well, it's been basing for the last 8-9 years, and then all of a sudden some major developments started happening where it started changing its personalities. You had resistance around 130 that it hit like 6 times, and then it just finally broke through a couple months ago, and gold has really surged the last 12 months. So this is an interesting development because if you look at a long-term chart, now we have a continuation, right? And this isn't a straight up move, by the way. This is what I'm looking at. This is a 15-year chart. So don't be licking your chops thinking you're going to get rich in a year, okay? This is going to take a long time to development, but if you have a long time, this is a very, very interesting development because, what I'm looking, because it completely changed personalities by breaking all these pivots. Now I'm kind of looking for a retracement. And I might have to bite the bullet and just buy a retracement with a stop somewhere around here. And I don't know if I'm going to buy GLD, it could be GDX, but this is a development that I'm looking at long term, okay? So what is also interesting to make the case long term for gold, and again, I think it does need to retrace, does need to consolidate for a while, could be 6 months, I don't know. But you have this RSI 14, and you can see that from 2005 to 2011, when it was up 350%, it never got oversold. Not even when it had a 40% bear market in 2008, right? The price of oil. And then when it started to top, then you had the switch from the bull to the bear, and then it never really got overbought, except once and barely, right? It kind of stayed down in this zone. Well, now, all of a sudden, you have a personality change where it could stay in the upper box. And if it stays in the upper box, meaning, let's say between 80 and 30, right? Not really living below 30. Or 80 and 40, kind of in that range, then you could have a pretty good move. So we'll just kind of have to keep an eye. In addition, down here, I'm looking at this relative ratio chart, the S&P 500 versus the GLD. So you can see the S&P 500 has been outperforming gold for a long time, since 2011. Now, all of a sudden, this trend line broke, and I think that's a pretty good break. So is this a false breakdown, which would mean above average move the other way? I don't know at the moment, but I'm just looking at a lot of evidence, and I think it's a pretty interesting case long term for GLT. Now, you might not ever get that retracement. I want to kind of disclose that. So we'll just always have to keep an eye on it because this is a very, very long-term chart. This is a weekly chart, and this is a 15-year chart. But it is something that looks pretty interesting. Now, I want to look at some ETFs because I am seeing some leadership change. Now, I have a list of about 250 ETFs that I track, and this is a 3-month relative ranking. So I'm just going to kind of get the price up here. So So why do I look, you got 3, 6, you could have 12-month relative strength rating. Now why I look at the 3-month ranking is because I'm looking for early trends to emerge. And, if it's really in the top 10 in a 3-month, maybe it could be the beginning of something. Like it could be climbing the rankings, okay? So right now I'm looking at this and I'm saying, okay, I have some new leadership in the top 10 and I felt that it was new enough that I would share with you. So you have nat gas right here, and nat gas is the strongest. And I'm not saying you can't find ETFs that are stronger than this. This is just kind of in my database. Most of them are in here. So you have nat gas that is really came off the bottom. In my opinion, this is still a really ugly chart. It could just be a counter trend rally, but I would keep an eye on it for a pullback. So we could just kind of keep an eye on that. But I'm not really excited about nat gas. Semiconductors have gotten strong again. I mean, semiconductors are volatile. Now, let me look at the weekly chart right here. Because you can see, they'll break an all-time high and then really get hit hard, and break an all-time high and really get hard. And right now, we're getting close to an all-time high, but, there are some strengths in semiconductors. Look, it picked off the all-time high, pulled back, probably could just kind of head out of here a little bit. So, semiconductors, I think this ETF, I'm sure there's leveraged ETFs out there, is showing some definite relative strength. Home construction, which has to do with, the lower interest rates, it also is looking strong. And the interesting thing is home construction, I mean, it hasn't done well since, it peaked in the beginning of 2018. When the market rolled over in 2018, this thing has never came back. So that's a really interesting development. Now, why do I like a situation like that? Because, the stocks are so beat up, they could run for a couple of years. So you have a really, really nice trend. And even in the correction, it didn't really correct that much. They're starting to pick up steam. I own one. I sold it. I should have held on to it. But aerospace and defense, this is really kind of a steady Freddy, what I call steady Freddy ETF, where it can just kind of ride the 50-day. And for the most part, it's a conservative ETF. But that's the daily chart. I'm switching back to the weekly chart. But look at some of these rallies in defense, right? Like you have like these. Even I'll go on the monthly chart. We're always spending money on defense. You can just have just major multi-year moves, consolidation for a couple of years, multi-year moves, consolidation for a year, multi-year move at the beginning, question mark, I don't know. But, when you look at the history of defense, it does look a little interesting. Platinum. So platinum is, in my opinion, this chart is still ugly. This is a weekly chart. It has been, let me look at the monthly chart. Now, I could draw a downtrend line straight down here and say, okay, it's breaking out of a 10-year chart. Let's go to the daily chart. This is a pretty good surge. So, maybe you look for an oversold. I don't have RSI on this, but maybe this is just one to keep an eye on. Solar has been strong for a while, and I know some solar stocks got hit. It tried to break down, but now it is, today is really, really strong. I think green energy stocks are here to stay, and you can see even solar stocks haven't even hit their 2015 peak. So, this is in a deep, deep base, and I don't even know where you draw the consolidation pivot. Maybe right here around 27 that it could just, start to head out of here. A couple things I really wanted to show you that I think are interesting in developing are, regional banks, and this could be in relation to the bounce in treasury yields off the bottom. But I see this as more of a swing trade scenario instead of a long-term play scenario, just because I don't know where yields are going. But regional banks have really climbed the top 10 rankings, really based on this surge off the bottoms. Kind of looks a little bit like the small cap chart, doesn't it? Because you got this sideways action, never hit the September high of last year before the market rolled over. Now you got a surge off the bottom, a little tight pullback. This could surge out of here, and it could be very, very strong. Another thing that I've noticed is interesting as far as really strong equity indexes is the Japan chart, okay? The Japan ETF. So this has really been ugly. This hasn't, hit an all-time high since it peaked in January of 2018 before we had that sell-off. So this is behind the times here. This is a really, really strong multi-week trend that, it rode the 5-day chart and is still riding the 5-day EMA for 2-3 weeks. So, I don't know if this is the entry right here with the tight stop and you just see how it goes, or you kind of wait for probably a deeper retracement. But this could be a trend change. And sometimes there's one thing I've learned about Asian markets is they can go parabolic. Maybe it's just the personality of some of the traders over there. I don't know, but they can really, really get strong. And I'm noticing that Japan all of a sudden is showing a change in personality and could play catch up. There could be some news over there. I haven't looked at the fundamental reason. But that could be interesting. And, Taiwan is all of a sudden kind of coming down here too to show some leadership. So that could be more evidence, right? I got more Japan ETFs right here. If I go back to the clean energy case, this chart looks a lot like solar, right? But it looks strong and it's really, really outperformed. And if I look at kind of a monthly chart right here, this thing, it's kind of crazy to think that this ETF was at 144. I don't know what happened here, if they did a reverse split. I don't know how the price got all the way down here, but it's starting to show a lot of relative strength with, and based on the upcoming election, with whoever is in office who is a little bit more environmentally friendly, I don't know, right? But there could be some anticipation, and it could be a buy the rumor, sell the news situation. Or, some of these companies, a lot of clean energy companies, they're not profitable. They've been getting tax cuts from the government for years, and eventually, the training wheels are going to have to come off. So some of these, I haven't done an in-depth analysis, but of the industry as a whole, but some of them could start to be able to turn profitable as some of the training wheels come off. So it's a very interesting long-term case, in my opinion. So right now, if I kind of do a recap and I'm looking at some interesting areas, I'm looking at home construction, I'm looking at clean energy, regional banks, in Japan ETF. I think these are just some areas to keep an eye on that are really, really showing some relative strength in the last 3 months. So let me know if you have any questions.